Yo, who was singing? How's it going? Hey,
Because of you,
hey,
mate.
up. Yeah, of course, of course. Yeah.
Oh, gosh.
I've got the looks, I've got the voice and everything, yeah? On X Factor.
Secret singer.
Nah, man. How's it going? How's everyone? Morning, afternoon, evening, everything.
Yo, I'm good, mate. Are you?
Yeah, good, man. I'm good, chilling.
Good, bro.
How's it going, everyone? We got like how many people now? It's 58, cool. Um, Probably some people sleeping, don't know. Different time zones in it, so it's what it is. But you don't want to miss out on this soon, especially obviously new people. Few people joined, so this is like the starting, like literally the starting point of the whole mentorship is like starting off from this Zoom call. Obviously, like you can't just jump onto entries. Like people asking me questions about entries already, and you can't be jumping onto entries when you haven't even like understood the full high time frame, bigger picture, and understood how you actually map up the ranges or structure that you used to call it. Then entries is pointless at that point. Like if you can't do that first step. So this Zoom call is going to be all about how I map up the high time frame to low time frame, order flow ranges, um, and obviously give you all the source necessary, right? So let's see. Shall we make a start now? Let's see what time is it. Yeah, might as well. I'll be recorded for everyone who hasn't made it onto the Zoom, so they can rewatch it. But let's begin. Let's begin and share my screen. Hold on. Let me make it. So yeah, everyone like mute yourselves for now. Obviously, any questions that you may have, just ask me at the end. Um, so I'm gonna run through everything that I need to. And if you're unsure about anything, just write it down on paper or something and ask me at the end so we don't like keep like cutting shit short or like interrupting the order flow. You know what I mean? Yeah, write it all down and at the end I'm gonna ask you to like raise your hands on the chat. So I'll take it in turns in case there's like a lot of questions. Usually there is. So yeah, let's begin. Let's begin. Okay, so first of all, right, this is what I used to do, and obviously I know a lot of you still do or learn, right, is structure mapping, right? Like, everyone learned about structure. They say structure is king, blah, blah, blah. Other people saying liquidity is king and structure is not. So it's all like subjective and stuff, right? The thing is with structure, right, it's all subjective. It's all fake as well. It's not real. Like the thing with me is like I like to know the facts of the market. I like to know real things. Like I want to know like, why is something happening? Like what's the logic behind it? Is it real? Is it fake? Is it just a theory or is it like a legit fact of the market, right? And structure is not a real fact of the market. It's just subjective. Like you can change these rules to fit whatever you want. You can change it to anything you want. You can change daily structure to 120 pips. You can change 4 hour structure to like 50 pips or something. 15-minute structure to like 15, 20 pips. Whatever you want to do. There's no real facts or anything. Like it's just about like understanding like the fact that just because structure is bullish just like this, low and high, does not mean like this is still your like extreme, for example, right? If this is your subjective like structure that you said, okay, this pullback is like 14, 13 pips or something, but don't you understand like inside of this structure, inside of this leg, we have like multiple levels of order flow ranges like that are controlling the flow of the market at the current moment of time. The current flow of the market at the moment, we are bearish coming down, then we switch bullish here, have a chain of character to go back to bullish, right? So understanding being on the right side of the market using order flow is really going to help you to obviously be on the right side of the market, to follow the flow, follow the price action, follow the sell orders or buy orders, which is a real factor of the market, not like structure or like, trend lines and Fibonacci's and all this stuff, right? It's all fake and concepts is all made up, yeah? Um, Whereas order flow is literally how the market moves in terms of flow of orders, the flow of sell orders or the flow of buy orders in the market, yeah. And our job is to follow this flow until we're wrong, yeah. If you keep following this flow until you're wrong, or until we come into like a high time frame, POI 4 hour and the high time frames, you know, at least we can continue to follow the flow until we reach to a point where we can stop, or until we just are wrong, right? And then this order flow switches back to bearish, and then we can start to look for sells potentially, yeah? So obviously, you know, I'm going to teach you how I map up order flow, and not like ever use like your structure again, right? Like it's just not something that works as well or makes as much sense as what order flow really does. And you know, another thing as well, like, you know, a factor of the market is not all of this stuff. Is literally, you know, buyers and sellers, right, that move price up and down, which is another word, like supply and demand is another word for it. Supply, you know, or let's talk about demand. So why does the price go higher? It's because there's more demand than supply in the market. And why does price go lower? It's because there's more supply than demand in the market. Yeah. And it doesn't matter if this low, this demand, this structure, this order flow gets broken with a wick or with a body. Yeah, it's still a break. It's still a fact of the market. The fact that sell orders has traveled below a buy order, right? So the sell order has not invalidated any sort of buy orders or demand that was resting in the market right here, right? So it doesn't matter if this is a wick or body. It's still broken. It's still violated it. It's still wiped out anything here, right? Some people say it's just a liquidity sweep. Some people say, oh, like it's just a wick break, so it must be weak or something, and now this high must be a weak high to get targeted or something. Like, but no, that shit does not make sense, you know. The fact of the market is all of this on the side here. This is all price points. Can you see all of this on the side? 1.12s, 1.11s. It's all real. It's all prices. Yeah, price points, and price interacts with price. You know, so it's like this price point interacting with this price. If for example this is your supply breaking this low or breaking this low, for example, like just because it's a wick or body breaking this high does not mean that it's not existent. Like a wick, you know, it's a real thing. A wick is also a body on a lower time frame as well. You know, just because, for example, let's go on to, let's just say this price action right here, yeah? So can you just look at this wick down, coming down here, yeah? So like I said, this wick that's traveled below, right? This buy order, this sell to buy, right? This sell order traveled below this buy order has now fully invalidated any demand that was resting here, any buy orders, anything, right? And just because it looks like a wick now does not mean it's not a body on a lower time frame, as you can see, right? And then what people do is like they get really confused and they're thinking like, oh, like, I don't know now, has it broken this low? Has it not broken it? Is it just a sweep? Is it not? Like, what is going on? Yeah. And you should never be confused. You should always know what's happening. You should always know what to do and like what to look for, and has it broken, has it not broken? You should always have like an objective set of rules, right? Like having such subjective stuff going on, your mind gets like blown away with like just random opinions and 10 different views, right? Another reason why I never use daily time frames. I don't use weekly. I don't use monthly. I don't need none of these time frames. When you don't need things, you don't need it on the charts. You don't need your brain to be so confused with a million things. Yeah, like you don't. There's so many things that you don't need in trading. It's crazy. Like you can literally strip back everything and just use a couple of things, and that's it. Like you can be profitable. You can be consistent. So I'll show you what I use. But yeah, in terms of like a wick break or body break, I don't need to wait for body closure for me to say it's broken like a low or something. Yeah. People just think like, oh, it's just a sweep of liquidity, and then now this high is gonna get broken like the opposite way. It doesn't make any sense because, like I said, supply has overcome demand. So supply is in control at the moment, and that's a real thing. Yeah? Supply overcoming demand, or demand overcoming the supply, right? So yeah, like I said, a body on this low. So never be confused, yeah. And then what happens, obviously, just continues lower pricing from this POI, yeah. I took a sell from here as well, and if I didn't like, you know, realize, or if I didn't say like a wick is a break, I would not be able to catch this sell right from here, because I would have said like, oh, this is a weak high, blah blah blah, and this is might happen, right? But no, you need to be objective with things, okay? So let's talk about, you know, what I really do use. And yeah, I really only ever need to use the 4-hour time frame for my high time frame ranges, right? So I got the 4-hour order flow ranges, and then I got the 15-minute order flow ranges to help me with the direction. And 5-minute order flow ranges are only used in 4-hour POIs. Yeah. But in terms of like why I use 4 hour is literally because the 4 hour is a high time frame for us to use in terms of like intraday trading. Obviously, we don't need daily, monthly, weekly to catch 10-hour trades. Yeah, like my favorite thing and what I really preach and recommend is to get to a level where you can confidently risk 1% and hold it full volume to like 10 hours at least. Yeah. So at 10 hour, which is 10% then profit, especially on US 30 because there's no commissions, right? So 10%, imagine. So like, why do you think I'm passing challenges like quite a lot? Because it's like 10% is enough to pass any sort of challenge, right? And then 5% on verification. So if you can confidently risk 1% on a trade and not take like 5 to 10 losses before like a win, which is what I try and do the best, is to avoid like many losses that are easily avoidable by following my set of rules that I've gotten. Yeah. Improve your strike rate. You know, you don't want to be taking 5, 10 losses before a win, because then you can never ever risk 1% confidently, because you're always going to be fearful that, okay, I'm going to lose the next trade anyways. I'm going to lose 5 times. So then you're going to hit drawdown on your funded account challenge and stuff, right? But yeah, what I use is the 4 hour time frame for the high time frame ranges, you know, the bigger picture, the high time frame order flow, and then using my 15-minute ranges to help me continue that flow, right? Either continue this bearish order flow, this pro trend with the 4 hour. It's like, you know, bearish order flow, which is called the continuation phase of the 4 hour, just continuing down, right? Or you get the pullback phase, right? Which is when you have a chain character and now price is just giving a pullback. It could be a complex pullback as well, right? But using the 15-minute to help us in catching these sells or catching these buys, right? And using 5-minute to help us to catch that reversal as well from here, or from a 4 hour POI, 4 hour POI, to catch that reversal as well on a low time frame, yeah, on a 5-minute. Only in a 4 hour POI though. So you can't ever use this like in random white space or something, yeah, just anywhere. Always and always in the 4 hour POIs, 4 hour POIs, 4 hour zones, yeah, 4 hour supply and demand zones, that's it, okay? But obviously you're going to cover that stuff like in later Zooms. But in terms of how I map up the 4 hour order flow and the lower time frame ones, is just like this, right? So what I want to see for a 4 hour order flow range is simply this, right? I want to see, let's say this is your high, this is your pullback, and this is your new break, yeah, this new high, low and high. So how can I map, how do I know that this is my order flow ranges? Like, how do I know? Because what I need to see is from the highest point, I need to see at least like a proper pullback, which has at least 2 candles inside of this range right here, right? Inside of, from the highest point, you don't classify the first candle, right? After the highest point, right, the pullback starts and we classify the next candles, yeah? So inside of this range right here, I want to see at least 2 candles in the range. It doesn't have to be bearish or bullish. One candle has to be at least bearish in the bullish trend, right? In a bullish market, right? In the uptrend, you want to see at least one bearish candle, which is opposing, yeah? So you want to see one opposing candle at least in the range, and at least 2 candles as well on the 4 hour time frame, by the way, yeah? And then the other thing, so as you can see, right, so we have 1, 2, 3, 4 candles in the range, right? The fifth one breaks it, yeah? The fifth one breaks it. So I don't classify the one that breaks. I don't classify the first candle, the highest point, yeah? So this would become the highest point, and then this would be the candle that breaks it, yeah? This would be the first candle, right? And then this candle here would be the one that breaks it. So I don't classify this or this. I don't classify, you know, the first candle here, the one that breaks it, yeah? So it's always inside of the range, yeah? Inside of here, right? So like I said, 2 candles in the range, one has to be opposing. And the last thing is that it needs to have a gap in the middle. It needs to have a gap in the range, right? So it needs to have a gap. So you can't just be like, you know, one wick down, wick up like this, wick down, wick up, like, you know, just some crappy wiki price action. It's got to be clean, push down, push up, push down, push up, gap in the middle, gaps in the range, yeah? I want to see that clean initiation and the proper impulse down, impulse up, yeah? Clean order flow, right? And same way I do with chalks as well. I'll show you later. But every chalk I do is like, it's got to have a gap in the range itself. Like, you see how this one has no gap from this high to this high in the break, yeah? You see how the wick is exactly the same, and then it just breaks. So for me, this low would never be a chalk, even on a 15 seconds, on a 1 minute time frame, anything. It's just a little, like, demand or something, little bearish sell to buy candle. But if for me, a chart looks completely a little bit different, right? It needs to have a gap. That's all it is. So we push up, and then we push down, and then push back up, right? 2 candles in the range, one is opposing, and we have a gap. Yeah. Again, this is then your highest point. We push down, push up, and then this is your gap in the middle. We have 2 candles in the range. One is opposing, meaning one is bearish. Yeah. And if you look at it the opposite way, the opposite way would be here. So now we're in a downtrend because we switched order flow from bullish to bearish, and now we're in a downtrend. So here to here. So again, this is your lowest point. This is your highest. Then we break. So in this range right here, can we see how there's 2 candles? There's 1, there's 2, 3, and 4. Yeah. So there's 4 candles in this range. We don't classify this one, and we don't classify the one that breaks. Yeah. So we have 4 candles in the range. We just need 2, right, minimum, and 1 is opposing, meaning 1 is bullish. Yeah. So like we're coming down, we need to have a bullish pullback candle. Yeah. 1 bullish pullback candle, and then can you see how we have a gap as well from this low to the break? There's that gap here. Yeah. So that's literally how I map it for our order flow ranges. And then the difference between the 4-hour and every lower time frames is that the only difference is you don't need 2 candles anymore on a lower time frame, such as 15-minute, 5-minute, 1 minute, 15 seconds. You know, that's the only time frames I actually ever use really for my like charts, like analysis, ranges, chalks and stuff. 4-hour, 15, 5, 1, and 15 seconds. Yeah. You know, I don't ever use 5 seconds. I don't use daily, weekly, monthly, right? Don't need anything else really. I just use different time frames to find my POIs on, but besides from that, like these are the main time frames. Yeah. So in terms of like 15-minute, let's go on 15 real quick. And let's just jump onto price action here, for example. So let's talk about 15 minutes. So 15-minute ranges can simply just have 1 candle pullback in the range. One has to be opposing though still, and still the gap as well. Yeah. So if we look at it like this, such as this, from this low, right, we pull back and then we break it. Yeah. We have a gap in the middle. We have a bullish candle in the range, right? One is also in the range itself. So like the bullish candle can be in the range, and also the one that's opposing, that's fine. All right. So this is in the range. We have another one as well. So that's actually 2 in the range, right, inside. And then the third one breaks, right? So that's good enough. This is my pullback and we break. Right? This is my high, this is my low, right? And then we break bullish. So then this is my new low, and then the high is here. And then we have a pullback again, which is a bearish candle in the range, opposing as well. And then we break it again bullish. Yeah. So then this is my new low, this is my new high. We then break bearish, right? Because we have this bullish pullback, we have a candle in the range, a gap in the middle, and we break it. Yeah. So when it comes to like the chalk, right, it has to look exactly the same as if it was a normal range. Yeah. So can you see, like, if you flip it around, yeah. So in terms of bullish market, you have a bearish kind of pullback and then we break, right? But in terms of like a bullish to bearish market, so now we go bearish, we have to have a bullish candle in the pullback, yeah. So we have that bullish candle, right? So what I want to basically say is like, even the first candle in the pullback, like the first one, that even if that is opposing, that's good enough. So the first one that's opposing, that's good enough. Like you don't need to have the middle one inside of the range be the opposing candle. Yeah. Even the first one, the first candle pullback, yeah, that can be opposing. But you do need 1 candle in the range as well. That could be bullish or bearish. Yeah. Just a candle in the range. And then we need that gap as well. Yeah. The reason why I obviously need a gap is because it shows me that strong momentum, strong intentions from supply and demand. I want to see the battle. I don't want to see just, you know, wiki crappy price action, just indecisive. Yeah. I want to see demand really trying to push price higher, and then supply overcoming demand and pushing price back down. Yeah. I want to see that proper interaction, that proper momentum doing stuff. Yeah. I want to see clean order flow ranges that is so visual to your eyes that you have a clear high and low, clear highs and lows, highs and lows. Yeah. Okay. So hopefully that makes sense. And if we carry on the ranges here, we break bearish, we're still bearish, we're bearish, then we go bullish, but then back to bearish. Yeah. So you know, this is my low, high, low, high, low, go bullish for a bit, but then back to bearish over here. Right. So now this part is very, very important to write down. Right. So everything I'm showing you on this 50-minute chart is literally exactly the same on the 5-minute chart, same on the 1-minute chart, same as 15-second charts. Yeah, literally everything's the same, such as like the pullbacks, one candle, such as the opposing candle and the gap as well. Yeah, they all are the same, right? The very a very important thing that you need to make sure you have written down and ingrained into your brain is the fact that, you know, like how structure, right? You'll have it like this. We break the structure high here, low and high, right? This is what you have like in terms of structure. But order flow is different. Like order flow, if we break, you know, just like low and high, we break, yeah, that's fine. This is your order flow, like your low and high, clean push, one impulse, you know, breaking this high here, that's fine. This is your low, this is your high, perfect. But if we break it like this, right? If we break this high with this flip, right? Your order flow no longer is sitting here. It's no longer here anymore. Yeah. The flow of orders, this didn't do anything if you really think about it, right? This low, all it did, this demand was push price higher up to a supply level, or just push price higher. Yeah. Has a move higher, but then does what? Do we have a pullback, meaning supply tries to overcome this demand, right? We have a push down, we have this pullback, and then demand again steps into the market to then push price high to actually finally overcome this high, this supply over here, yeah, this range. We overcome it from this low, right? So in terms of like what is really your order flow low, it's no longer from here. It's actually from here. This is what it was responsible for breaking your range high or breaking the supply. Okay, so your order flow range, right, is from this low now to the high. It's no longer from here to here. Okay, order flow is ever changing. It keeps changing. Like the flow is also always going to be changing. Like the flow of orders is ever changing. That's why you don't have like an extreme of structure, because it's not real. Like to get to like an extreme of a structure, your order flow has to like, you know, shift. For example, like, you know, bullish back to bearish. So like this is your flow, right? This is your flow. This doesn't mean anything that important, like in terms of like structure stuff. So, you know, people just put like 5 seconds or get into like an entry just at this low, thinking that this must be everything, like, but it's not, right? And they get clapped because you're not understanding the flow has changed to get back into there. Yeah, so you can't be so aggressive to try and get into the entry. Right? You wait for another shift in order flow to then get into the entry, right? Every time you wait, like honestly, waiting for shifts in order flow in your favor is the most like highest probable scenarios, highest probable type of trading you can do, right? When you're always fighting against order flow, you're always against it. You know, price is melting and you're trying to buy this, buy it, it's melting, right? Trying to catch a falling knife, you just get completely smashed, right? So often, you get so many more losses. Your strike rate goes way lower, yeah? So basically, everything I'm showing you here, the question is exactly this. Order flow, where is it? Not that one, here. So this is a question that you need to ask yourself always for every range, right? 4 hour, 15, 5-minute, everything, right? So this is a question. What flipped and broke the range? That becomes your new low and your new order flow, right? Literally, literally what it means is like, let's say, obviously you are bearish, just like this, you know, we're bearish. Let me just try it again. This. Yeah, so like, can you see how like we are bearish, order flow coming down? This should be a protected high to, you know, continue low pricing, right? But then why did price, you know, push price higher, gives a little reaction, but then breaks through this high, yeah? So then again, the question is what flipped and broke this range? What broke it, you know? It was this low, right? Not this low. So in terms of as well, how should this look? This should look exactly the same as what your order flow range should look like anyways. So, you know, like on the 4 hour, like I said, on the 4 hour, I want to see here 2 candle pullbacks in this range. One has to be opposing, and we want to see that gap as well before we break the high. Yeah, meaning like it can't just be like a little sell to buy wick or something. Yeah, it's got to be a proper push down, push up, which literally meets the criteria of the order flow ranges. Okay, and like I said, on the 15-minute, 5-minute ranges, I just need to see one candle pull back in this range. One has to be opposing, whether it be the first candle pullback or in the range, right? And then the gap in the middle, right? The gap in the range, right? That's it. Okay, so this is very crucial, right? So meaning like if we then break this low here, this is actually your chalk, let's say a 15-minute chalk. This is actually the chalk here, right? It's not this low. right? So when you're waiting, if your thinking structure is like here to here, you're waiting for this to get broken for you to look for like a sell, for example, and then like, it's broken, you missed the whole move, for example, yeah? Whereas if it breaks this low, this is already a choke. We pull back into like a supply, we could sell it down. That's possible, yeah? So it's very, very important to understand this stuff. I'll show you many examples as well, but yeah, crucial. So let's give you some examples on the 4-hour here. So let's see, I think it was right here. So look at this. 4-hour order flow ranges. We're bearish, we're still bearish, right? High and low, high and low. None of these meet the criteria, right? None of them have like 2 candles in a range. Yes, it has a gap here, but again, 1 candle only in the range, yeah? And this is it's good enough that it has 1 candle bullish, right, which is the first one. But because it only has 1 candle in the range itself, I'm not going to classify that as my high or my low, right? So I need to see 2 inside of here, right? But it's only 1, right? So that's why this is my high and this is my low, right? But then how did we actually go and break this high? Was it a clean impulse like this? Then that would be on my low and high, but it wasn't, right? It pushed up, it pulled back, and then it broke, okay? So like I said, what flipped and broke the range? It was actually this low and to here, yeah? This low to this high. This is really your order flow range right here, okay? And why, is this your range? Because can you see that in this pullback right here, in here, we literally have the same criteria that fits the order flow ranges, meaning like we have 2 candles inside of the range, right? We have one is opposing, which is this bearish candle right here, okay? And we have that gap right here, yeah? That clean pull down, push up, right? So this completely fits the criteria for my order flow range on the 4-hour time frame. So that's why I'm going to mark up this as my low and high. So do you know when you're marking up your premium discounts, right? It should always be from here to here, yeah? It's not from here to here. It's not the swing lowest, highest points like this or structure, no. It's what flipped and broke it. It's the order flow low that broke the high here, yeah? This is the demand that really went and broke this supply here, this high, okay? So this is very important because obviously when you're mapping up your POIs and stuff, you always got to make sure that it's in the premium discount of your 50-minute and 5-minute order flow ranges. Yeah. On the 4-hour, I don't really use this that much. Only it's like as a confluence for like my POIs in terms of the bigger ranges and stuff. But like, I've seen most of the time like price doesn't need to come into the premium discount of the 4-hour to continue its business. Yeah. You can see how like if you look at stuff like this to this to this, yeah, like it doesn't pull back into the discount. Again, this doesn't pull back into the discount, right? It continues from just, if it wants to continue, it will continue, yeah? Again, this low to this high, it doesn't pull back into the discount, right? Discounts like literally what, here to here? Yeah, it doesn't pull back in discount. It doesn't have to. Like if it's going with momentum and the high time frame is bullish, it wants to just keep going, like impulsing, it will just go, yeah? So, but what you got to make sure though is like your 15-minute order flow range has to always come back into 50-minute and 5-minute order flow ranges has to come back into the discount of your bullish range or in the premium of your bearish range for you to ever look for an entry. Yeah, your entry should always be realistically in this discount here and the premiums, right? Same, like obviously in any sort of business, you want to buy low and sell high. Yeah, like it's just a foundational like concept of any sort of business. So same here, we want to buy low and then sell high. Yeah. So like I said again, what flipped and broke this 4-hour high, it was this low to here. So when you're looking at like, okay, chocks, right? This is the low to get broken, right? So we already have that early indication that price may want to continue lower, yeah? If you're waiting for like this low to get broken, what you'll end up going to be thinking is like, this might happen, right? So you're going to be completely on the wrong side, right? But you want to be on the right side more often, meaning like follow the flow to be on the right side and then chocks bearish and then follow this flow down, right? Chocks bullish, follow the flow bullish, right? Back up. So literally best thing I've ever come up with and made and like found, in terms of trading, honestly, is the thing that makes literally the most sense of like I've ever witnessed. And yeah, it works the best as well. So statistically, brace is low. So now we already are bearish, right? And then yeah, this is not a range, but this to this is your range, here to here, yeah? Because here, look at the pullback. We have so many candles in this range. We have opposing candle, which is bullish one, right? We have so many bullish ones, but one is enough. And we have that big gap here too, right? Even a small gap is enough, yeah? It doesn't have to be huge like this, right? So then here we have the chop bullish, right? So you see how this is your first indication, okay, we might see higher pricing. So then we continue bullish on the 4 hour all the time, right? All these breaks right here. And there was a lot of trades. There was a lot of trades buying from here and then selling from here, right? I'm not going to go over trades today, but like if you go into the markups, actually, my end of day markups, like you'll see some, you'll see quite a lot of them. I'm pretty sure, yeah, I'm sure I have these ones as well on there, so definitely have a look. So does that one make sense? Just kind of like type it in the chat if yes or no, that part. Yep. Obviously, it's just going to take a bit of time to kind of adjust and train your eyes and stuff. But trust me, like once you do see what I'm seeing, and like a lot of people that joined me from the beginning, they see what I'm seeing. Your whole thing's going to change. Sick, nice one. Okay, so again, let me just kind of like go over like a 5-minute one, just because it's like lower time frame. But just imagine again, like this POI right here, the gray one is your 4-hour POI and price taps into it here, yeah? Price taps into it here, yeah? Where is the 5-minute chocks, 5-minute range? Let me see if I already have that marked up. Yeah, I'll go over like this one, right, just here, and hide that. Hide this, okay. So price has tapped into the 4-hour POI and the 5-minute ranges are high, pull back, break the high, yeah? And this is just a clean break because you see how like this pullback to the bullish candle has no gap, no pullback, no candle in the range, right? Nothing, yeah? So this to this is not your chalk, right? People use chalks everywhere and anywhere. Like people use chalks as like an inside bar thing or like a little sell to buy wicks and stuff. If I can find an example, yeah, here. People like use this and this as a chalk, bullish, like, and like just random crazy stuff like all the time. And the thing is like the more trades that you can see equals more available losses that you can also take as well. And that's the issue. Like you don't want to be taking, hundreds of losses, right, trying to catch a move because you're seeing so many chalks and so many opportunities. No, you can't be doing that. You need to see very specific way of looking at chalks and very specific areas where you're going to look for trades at. So there's not going to be hundreds of chalks everywhere, no. And also don't ever use internal chalks as well. Internal is like when you have like, this is your bullish range, right? And then like this is your actual proper low, like that made a high. So I'm not using anything inside of this leg right here. I'm using this low as a chalk itself, yeah? So there's no like internal business going on here. Like it's not this to this, whereas it's meant to be, for example, it's gonna be here. Oh yeah, here to here, right? Pull back, break the low, right? So then this high would be a chalk, yeah? Not gonna be some like crazy, just little candles, crappy candles, or some like inside bar stuff. Like that's why you don't see me with the indicator or like inside bars or anything. I just use my watermark and no gaps candles sometimes if I need to, but I don't really use it as well, right? Because like I said, we don't use 5 seconds. You don't need 5 seconds, or you literally don't need it. Like 5 seconds again, more opportunities, more losses. Yeah, literally, you be trying to catch 5 seconds in every single sort of POI, every single thing. People refine it down from the 4-hour POIs down to like 1-minute POIs. It's crazy. Like you're just trying to catch every single high and low in the market. Yeah, and you just get clapped up and down like a yo-yo, right? So to avoid all of that, this is what I do. So as you can see, price taps into that 4-hour POI and 5-minute is from here to here. Yeah. But then again, this was your low, this was your high. We then, instead of like breaking that low to chalk bearish in one clean push, it actually pushes down, it then gives that reaction, and then from this high is where it actually goes and breaks that low here. Yeah. So your premium discount, your high and low, is no longer from this high to this low, it's actually from this high to this low, right? So this is very important, again, like I said, for your POIs. Your POI should be in the premium of this range, right? Not down here in a discount, yeah? I never ever will sell like following like 1 minute continuation, sell in discounts, no, right? Always going to be up in the premium area, yeah? So this is my high, this is my low, right? We pull back in, 5 minute entry model is going to be entry model 1, right? Going to go over that in a different call, but entry model 1 is simply where you have the 4-hour POIs, you have the 5-minute chalk, then you find your refined POI inside of here, such as on the 1 minute time frame, and I'll find the refinement, for example, probably a different time frame, like, so can't really remember now, but I think it was a 2 minute or something. But yeah, we had a POI over here. Price taps into the POI, gives you the chalk again. Like it's the same scenario. Like the 1 minute chalks. Do you see how it's a pullback with a bearish candle, right? We have a pullback, one bearish candle. We have a gap in the middle, clean push down, push up. Yeah. So this is the low to get broken, right? Chalk here, pull back in, entry inside of here, as well as the 15 seconds is also perfectly aligned with the 1 minute, as you can see here to here. Yeah, the 15 seconds is also aligned, right? Meaning that the 15 seconds does not have to chuck anything to go back to bullish to get back into here. It doesn't have to chuck anything, right? When the 1 minute and 15 seconds are both aligned, you can just simply enter this trade, right? Just market execute, stop loss above the high, and you saw it. Yeah. Literally quite a few of us took this trade and passed my challenge as well with this trade. But yeah, 1% risk, go for 10 hours, or if you need to only go for 8 hours due to the challenge, like MFF 8%, and stuff other ones, then you can just do that. That's it, right? But in terms of the order flow ranges and stuff, does this make sense on the 5 minute and 15 minute same, right? Exactly. Don't we need just a 15-second chalk here? Yeah, you do, yeah. But it was exactly the same. Yeah. 1 minute and 15 seconds was exactly the same. And I love to see 1 minute. If it gives a 1 minute, it's even better, it's even more high time frame, isn't it? So when something on that more of a high time frame level gets broken, that's even better confirmation. You know what I mean? Even better confirmation. But yeah, people just jump on 5 seconds on every single place, every single high and low POIs, extremes, and refining it from the daily down to the 1 minute POIs. No wonder you're getting clapped 100 times, Flips, you don't need flips for anything. SD flips for entries and POIs and stuff. You don't need flips for an entry model, like a chalk and flip. You don't need flips. If it's there, it's there. But if it's not there, I don't care. All right. Same a lot of things that you just don't need in trading. So look at this as well on the 15 minute. You can see how literally such a small gap right here. Yeah. Such that small gap there. Even that's enough. That sell to buy. Yeah, one bearish candle in the range as well. We have the gap here. That's fine. This is my low. This is my high. Yeah. And then look at this when we flipping, bro. It's frozen. Shit. Yo. Hold on. What the fuck? The thing's froze. Okay. Strange. Yeah. So look at this. So can you see how this was your low, this was your high. We break here, but then we break bearish. And what actually caused that break of the low? It was actually this high here. Yeah. This is your last push up, push down to actually break that low, right? So this was the responsible high for breaking that low here. So then, yeah, this should be in theory getting protected to continue lower. This high should not be protected to continue lower. This should be protected to continue lower. It doesn't want to continue lower, right? It pushes up, pushes back down, and then actually goes and breaks it. Yeah. So this is my new low, my high, right? So then again, this is the low to get broken. So yeah, we send bearish right for a bit. But yeah, you blown away. Yeah, man. What's this? I'll execute once price goes to below 1.5. Yeah. What was your thinking to get 1.1? I think I got like 1.2 or something on this. 1.1 or 1.2. It was one of them. Like, but yeah, I do similar thing. I literally just wait for it to mitigate my entry. As soon as I get small enough stop loss, I click on sell. And then when you click on sell, when it's coming towards you, you can get a better fill. Yeah. Like it'll fill you in deeper. But when you click and sell when it's moving away from you, it will just fill you in like lower, right? So you'll get a worse entry and stop loss, 2.2 pips, right? And if anyone who is not like familiar with like US30 is like, you see how this says 13, right? Basically on TradingView, one pip on here will say 10, okay? 10 points basically, yeah? That's how it works with indices on here. You can use buy stop, sell stops. Yeah, you can use that. If the stop loss is small enough, like if it's 1.5 pips under, you can use that. Yeah. Does it count as a 50-minute chop there? I see only one opposing candle. Next one breaking the range. Yeah, like because like I said, you only need one candle in the range itself, and one is opposing. It can be either the one in the range or the first one itself. So you see how this candle, yeah. If the pullback, if this is a black candle and this one is a white candle, but it has a gap inside, and we break it, that's fine as well. Yeah. So let me see. This is an example. Bearish. Yeah, just like here. You see how like the highest one, the highest candle is a bearish one, anyways. Yeah, it's a black candle. So I can use this as like the pullback as like a one candle, but I can't use it as the one that's in the range, right? So this alone, right, and the next one just wicks higher, like it doesn't classify as a chalk or a order flow range, right? It's actually from this high, we pull back down, right? We have that gap here, right? We have the candle in the range, one is bearish, and then we break it, yeah? So do you see how this is exactly the same, like in terms of the pullback and the break and the gap as this one? Because we have the pullback, right? One candle in the range is bearish as well. We have the gap here, and then we break it bullish, yeah? Low and high. So is it summarized of what the Zoom is about? You have to send it on Discord. They'll send me links on on Zoom. Great. So does anyone have any questions at all on this? I got a hand up from Kashif Beroz.
Hey, Krish, how are you?
I'm good, man. How are you doing?
I'm good. Just a quick one. For the order flow range, when we have that opposing candle rule, that could be the first candle also. Is that applicable on 4-hour and all the low time frames, or just on
everything.
The lower time? Everything. Okay.
Yeah.
Okay.
Everything.
The first candle could be the opposite one, not necessarily in the range.
Just like this. The first candle, yeah, the highest one.
Yeah.
This is the first one. This can be opposite. That's fine. So once I have this one, I don't need another opposite candle here. I can just have at least two candles in this range on a 4-hour time frame, and then breaks it. That's fine.
Oh, okay. Thanks.
Yeah, no worries. Jamie, how's it going?
How are you doing, Cash? You all right?
Yeah, you?
Yeah, I'm good, man. I'm good. Can you go back onto the 15-minute, please?
Yeah, sure. Which part here?
Yeah, there. So on the left-hand side, you've got the break of the range, like the first chalk, I suppose.
Yeah.
Hold on. Let me just annotate.
Oh, here?
Yeah. So you broke here, yeah. But then we were saying that this here is the high.
Yeah.
That broke, yeah. So how? Obviously, the rule is to use the same sort of ranges for that you'd use on the M15, etc. But are we using this low to determine the range? So like, you would need at least one candle in the opposite direction.
Yeah, exactly. Every time is the question what flipped and broke the range. That itself needs to look like the range. That itself needs to look like a valid range itself. Like the pullback is a bullish candle. We have a gap in the range, and then it breaks that low. But obviously this is a real low to get broken. But I'm just saying that this also needs to look like a real range. Yeah.
Okay, yeah, that makes sense.
To fit the same criteria, as in the 4-hour needs to have two in this range, but the 15 and lower ones need to only have one. And the reason why the 4-hour I want to see at least two in the range is because I don't want to see 4-hour chucking, being like breaking up and down, left, right, center, like every 2 seconds, like a lower time frame one will do. I want to see 4-hour holding. I want to see it holding itself, like proper strong ranges to hold, and then using 15 and 5 to catch that reversal, catch that pullback, catch the continuations. That's the one that will chuck more often. Obviously, low time frames, isn't it? High time frames have more orders, have more weight to them. You know, they have more volume of orders, stacking these buy orders before the sell. So you want to see a price come back to and show us a bearish reaction. If it doesn't follow bearish and it just wants to continue bullish, then this was the low that actually broke the high. This was a demand that overcomes the supply. So this should be now protected if it wants to continue like higher pricing. Yeah.
Yeah. Okay, makes sense. Thanks.
No worries. Anyone else? Let me know. So once this gets clear into your brain, like it's the most important step. This first step. Yep. So 4-hour ranges, 15-minute to help you with the direction. Like, so 4-hour is basically your bigger direction, your 15-minute to help you in that direction or the pullback of it, right? And then again, continuation, sells, pullback, right? And then we can use 5-minute in these areas, right? If we come into like a 4-hour zone, 4-hour POI, 4-hour POI, 4-hour zones, yeah? 5-minute is enough, right? Because sometimes the 50-minute does not chuck fast enough for like give you the entry, and then using the 5-minute order flows instead in your favor, that would really like to be honest, it's literally the best entry model. Statistically and everything, it literally is the best entry model in the strategy, is the 5-minute entry model with the 4-hour POIs. It's so funny as well because the entry model, like, you know how like everyone's always said to you before, like structure is king, liquidity is king, blah, blah, blah. It's so funny how like that model has no liquidity or structure involved whatsoever. And yeah, it's just crazy, you know. Trading is very interesting, like, and fascinating stuff. You know, when shit clicks, when it works, yeah, really works. So if we're not making anything on the left, we use a 50-minute range, exactly. 5 minutes only for 4 hours zone, yeah. So if it's just like in a random place, like let's say all of this is just, let's say there's no POIs and the price is just here, we're always just using 15-minute, yeah. And especially, for example, look at this one, yeah. So we break 4-hour, it was bearish, then we go bullish, right? So for you to, wait, which one? Let me show you that example. Oh, here, right? So 4-hour, we break here, then we break back to bearish. So 4-hour is bearish from the high, like this, right? From this high to this low. We pull back, we break again, high and low. But then we go bullish, right? So for you to catch a counter trend sell from this high to the pullback, right? Little pullback trade, counter trend 4-hour trade. You need to here wait for a 15-minute chop because on the left there's nothing. Like the 4-hour POI is probably up here. Yeah. Here there's all imbalance. There's no 4-hour zones, no nothing. Yeah. So for you to ever sell from this high, counter trend, 15-minute chop. Yeah? But then let's say, you know, we come back into 4-hour POI, for example, here you can use a 5-minute chop. Yeah. 5 minute for 4 hours only. So I disregard it for 3, 2, 1. Yeah, exactly. Don't go from 4-hour downwards. Yeah, it's always upwards. Like, so from 4-hour, you can, if it's not clean POIs and stuff, you know, we go upwards, like 5 hours, 6 hour, you know, up to like 10 hours, like, and 50-minute time frame, same. From 50-minute POIs, we go down. We never go down like to like 14, 13, 12, right? You go upwards, like 16, 17, 18, 20, right? So find it. So the last supply demand that broke the range is most of the time an internal range. Other instances where you look at internal ranges, no, like that's only the thing. Like, it's literally only that where, like, you know, you have the one that flipped and broke the high. Yeah, this becomes your new range. Yes, it was like, you can say internal to the whole thing, but like this is what should be protected to continue higher pricing, and if it fails, it's because we want to go lower. Yeah, and yeah, like really works so much more than saying like this is your structure, thinking that this is gonna happen and get clapped. Yeah. Perfect. Appreciate it. Nice ones. Another thing let's go over as well is like the shitwick scenario. Yeah, SW. Right, stands for shitwick. Right. So this is something that I've seen in price action. You know, a lot of people don't like pay attention to this stuff and get really confused about it, but something is very important to consider is a shitwick. Right. A shitwick is when, let me just find the example. Where is that? Like, let's see. Yeah, here. So a shit wick is literally an example of it is this wick right here. So you see how like, you know, price was bearish right here to here. And then you can argue like, okay, we had this pullback and then we broke down, but then we broke back up like in one go, like this one candle wick, right? Same candle, wicks both the low and the high together. This is not going to be classified for me ever as like a new range, as a new order flow range, no, or as a choker even, right? As a chock, you can never use this as a chock, right? Never ever use this one candle wicking down, wicking up, right? Body in the middle, wick up, wick down, right? Using this as a chock, never, yeah? So whenever you see a price action just like this, where there's nothing, there's no clear low and high, no chock, no nothing, it's just looking completely bullshit, then continue to use the previous range from this high to this low, right? Just like that, okay? Continue using the previous high, right? Don't be confused about this price action and thinking like, oh yeah, it's chopped back bullish, or I don't know, I'm confused. Maybe we're gonna continue higher pricing, I don't know, right? But no, I'm just gonna be still using the last one, right, to the lowest point, and then using like this as my 4-hour POI, looking for sales, yeah? I caught sales as well from here, like using like the same entry model, very clean entries. There was 3 entries of sales coming down here. Okay. So does this shitwick scenario make sense? Yeah. As a chock, it doesn't. It's never going to be used as a chock. But if it's like part of the order flow itself, as in like continuations of order flow, if it's continuing, and then you see that like shitwick continue like this, right? That's fine as a continuation, right? So let me show you an example. Let's see, continuation. So I think this is one of them right here, where we have like we're already bullish, yeah. And then you see how like there's this wick which like wicks the high. It also wicks the low right here, like this. Like this could be like you're a bit confused. You're thinking I'm not sure, like, you know, which one's still the high and low and stuff. But yeah, it's always gonna be then like, you know, the lowest point here is following the continuation already bullish, right? So it's still the lowest point, then to the new high, lowest point, new high, right? If you see a shit wick in terms of continuation, we can take it. If you see it in terms of like from a bullish to bearish chock though, like then we can't use as a chock, yeah? If it's just a chock with a shit wick, it goes up and down, takes the low, takes the high, whatever. Don't use that, yeah? Let's see if there's another good example. Oh yeah, I know. In the facts, it's got everything that you need. I'm gonna separate them and make them cleaner into separate channels for everyone to see. But let me just pull up like a really good example right here. Just copy and just see how I can't do it. Hold on. Let me do this. Okay, so this is in the in the facts page as well. But can you see how? Let me just zoom in. Can you see how this one, right? In this case, we have a shit wick, but since it's an order for continuation, it is a valid range, right? Because we're already bullish. We pull back down, but you see how this one candle bullish wick goes up and down, right? It's like we have one wick down, one wick that breaks the highs, or same candlestick, yeah? But this is fine in terms of using this as like your order flow range, low and high, part of a continuation. part of the continuation. Yeah, that's fine. But when it's like the one I just showed you here, even though it formed the low and then took the high here, it's still a shit wick because it's a chop. Yeah, you see how this is bearish order flow, break the low, we pull back again, but then this shit wick is the one that takes the low and the high here. Yeah, so in terms of like a bullish chop, that's not a chop. Yeah, so instead I'm still going to use this high to the lowest point, pull back and break the low. Yeah, just like I showed you before. This to this to this to this. Yeah. Okay. Does this make sense here? It's very, very important. Like, I know a lot of people never like looked at this shit, I think, before, but it's very, very crucial to like make sure you're not, taking some crappy bullshit, confusing chops and stuff, right? Like that. Okay. The sell entry on Friday, that was a shit wick as well. I'll have to check that one. Not sure which one. Just let me know if everyone understands this first. Yeah. Makes sense. Yeah. Clear. Any questions? Anything so far? Unmute yourselves if you want. Unmute. Don't be shy. Anything? Clear, yeah.
That's all good to me, mate.
Yeah, it's always good to you, man. Other people.
Yeah, no, that's what I'm just saying.
Yeah, it's always clear to you.
Just letting you know, that's all.
Nah, that's really good. Because this shit wick thing is like a bit of a tricky situation, but a tricky like thing to really understand,
Oh yeah, I didn't know it before at the start, mate.
I know, yeah. It comes with like just viewing price action a lot and then seeing things a lot and seeing like, okay, what is this? Like, does it make sense? How can I avoid stuff? How can I make sense of it? Or how's the best way to go about, things? And obviously a lot of people, they don't obviously see this or consider it or like put in the work or back test it and stuff. So, doing this and obviously sharing it with everyone is yeah, very, very helpful. Shit wicks.
Agree, mate. Yeah, cheers.
No problem. So shit wicks in pro trend or valid, shit wicks in counter trend for a chock or invalid, simple, yes, no gap, no valid. Yep. Exactly. Like that has a gap as well in the pullback here, that little gap here.
Yeah.
Again, this one has no gap in between that bearish candle wick here to that break. There's nothing, so invalid. Sick. Okay. And some people are just shy, not unmuting yourself. I know on the group chat later it's gonna be like questions like, oh, like, like, what did you mean by this? I'll be like, bruh, no, it's doing out. No, it's all good. Any questions, let me know. Okay, that's fine. So what's the time now? An hour? Yeah. Well, yeah, that's fine. In this call, like obviously this is the main thing to discuss in terms of the order flow concepts. This is the main thing that you need to firstly fully understand and get to grips with, and obviously make sure you do all the testing, back testing, just to train your eyes, like go back into time, into data, just keep marking and like, understanding like, okay, is this valid or not? Like, send me the charts and stuff when you've done it so I can like, review it and stuff and tell you like where you gone a bit wrong or like if you're all right, I can let you know. And put in the work, like people that put in the work, they're the people that smash it. People that just sit down, do nothing and think that trading is going to be easy. It's not. Like trading, I think, is the hardest thing ever to master. And I've given you the shortcuts to like basically get good at it because I've done the hard work for you, but you do still need to put in a lot of work just to train your eyes and get used to it, gain the confidence that you can start risking like bigger money, taking less trades, be more patient, disciplined, and yeah, in turn be more consistent and profitable, innit? So hopefully this is all good and makes sense. Just delete structure from your vocabulary, basically. and yeah, follow Orderflow. Orderflow is basically king, you can say. It's not even about king and stuff. It's just about like, you know, following the flow of orders. You know, it's just the thing that makes more logical sense. You got to do that, and that's how the market moves. Buy orders and sell orders, up and down, up and down. Okay, so any questions or anything anyone wants to add anything or ask me anything, just unmute yourselves. But if not, then I think we can end it here for now and have a good Sunday. For a pullback counter trend, do we need to wait for a 15-minute choke or 5-minute? So like I said earlier, like if let's say your counter trend, let's say you're bullish on the 4-hour, you want to sell it down, right? If this high here has not mitigated a 4-hour POI, you have to use a 15-minute choke for sells. But if it has mitigated a 4-hour POI, you can use 5-minute chokes for sells. Okay. Sick person. Yeah, just want to make it all clear, you know, don't want to drag you on for like 5 hours, but as clear and systematic as possible. That's how trading should be, you know. Set of rules, do this, it has to look like this for everything. You know, your chocks should all look the same as well, like, you know, the chock is like the highest to the lowest point, like, you know, the same exactly way I view the high time frame and low time frame order flow ranges. It's the same way. So let's say, you know, like this one, you see how this, you can say is your high and low, but what flipped and broke the low is this high, yeah? You see how a gap in the middle, bullish candle, you know, break. So this is your last point of like basic supply, you can say, that actually broke that demand here, yeah? So this would be the chock, right? Not this high. It's the same on the 15 seconds, yeah? This has to be clear. Gap, push up, push down, chock here, yeah? It's all fractal, isn't it? So, okay. Clear. Yeah, no worries. Obviously, I'm going to do a couple of live New York trading calls during the week on Wednesday and Thursday for like a couple hours as well. So obviously, any trades that come, I'll take them and like do the analysis together. Any questions, anything, you know, I'm always like basically like available 24/7, so I can sleep. But yeah, no worries. All good, yeah. Sick. So we'll end it here then. And I will upload it onto the Dropbox in a bit. So you can rewatch it. Make sure you rewatch it, write down everything that you missed. And yeah.
Cheers, Cash.
No problem, man. Have a good weekend. Enjoy Sunday. And I'll catch you later.
Cheers, bro.
Thank you, mate.
Take care. See you later.
In a bit.
See you in a bit.
It's late.
Bye.